Hi and welcome back to Cheeky Crypto. In today's video, we're going to be diving down into the world of Harmony One to see exactly what's been going on with the price action and whether or not we could be expecting a deeper pullback. As we get into this video, if you do find it useful and informative, hit that like button. Really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe? Tap that bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. Right, with that said, done, and out of the way, let's jump on down to the desktop, jump into the charts, and take a look at what's going on here with Harmony One. Okay, guys, so this is the weekly chart. This is where we usually like to start to give you the kind of overview that is very much required, specifically in times like this when there is a downtrend in the market. It's important that we understand the bigger picture, right, rather than just focusing in on those micro movements. And for Harmony One here, you can see that we are still following this Elliott waves 1 through 5. Okay, so 1, 2, 3, 4, and 5, right? So 5 impulsive move to the upside. Okay, so this is basically 3 up, 1 is up, 3 is up, and 5 is up. Okay, and there's 2 downtrends. Wave 2 is down and wave 4 is down. So pretty simple stuff. And it's good to see when we zoom out on Harmony One that the structure is still here, right? We tracked nicely for wave 1, down nicely for wave 2, up very nicely for wave 3, down for wave 4, and we're still following the trend here for wave 5. Okay, so everything's looking very good from a structural point of view on our weekly chart, right? We're not deviating away, not in the same way that we are for something like Cardano, for example. This is a significant kind of deviation away from that trend, okay? But for Harmony One, we are actually looking pretty good, okay? So overall, our weekly chart is very well structured. We also have our strong support line here. This is basically a trend line that was upper resistance turned to support. Okay, so this is an interesting line that we're going to track for quite some time as well. In here, of course, there are a few areas that we were looking at buying. Obviously, you can see these in here. So if we were looking to get into the market, where were those opportune moments? Here you can see there was a pullback here. We took that nicely. There was a pullback here. We took that nicely. Likewise at the bottom here as well, right? So we can see that we'll be able to take advantage of those kind of micro movements on the daily chart, right? And we can see those quite clearly. Now there was a cup and handle. We hit the target on that. We actually pushed up to about 38 cents and we pulled back a little bit as well. Now the other thing that's important to note on this weekly chart is the overall trend, right? Obviously, I've been talking about the trend of the Elliott wave, but it's also important that we actually take into consideration our Fibonacci retracement. But this is not just a regular Fibonacci retracement, okay? This is a trend-based fib extension, which basically means that we were able to take the trends of these bull runs and actually plot out where our 4.236 extension is likely to go. Okay, so for that, what we do is we take a look at the downtrend of wave 2, we take a trend line of wave 3 up, and then we take the trend line of wave 4 down, okay? So we take into consideration 3 anchor points, the bottom of wave 2, the top of wave 3, and the bottom of wave 4. When we take those 3 into consideration, we get a 4.236 extension of 96.5 cents. Okay, so that's kind of the expectation that I have for this 5th wave by the peak of the bull run. Okay, so obviously right now we're trading at 27.4 cents at the point of recording this video, just on top of the support line here at 28, okay, or just below that support line at 28 cents. So it's important that we acknowledge that there's good growth still to occur, and this actual movement here of sideways trading isn't something that we haven't seen before. We've seen it down here, for example, before things really went and took a good leap to the upside. And again, you know, nothing moves up in straight lines either, okay? Even during the wave 1, there were some red candles in here, including wave 3. And obviously, where we are in wave 5, we obviously have a few as well, right? So it's important that we acknowledge that nothing moves up in straight lines. We do bounce around quite a bit, and we'd like to look at those strong resistance and strong support lines. So overall, we are getting some good traction to the upside. We can see that pretty much from the low areas that we had over here. Even though, you know, September was a pullback month, we have, of course, seen some pretty good growth overall, right? The cup and handle, in fact, there was a kind of mini cup and handle, so cup, handle, target, and then pullback, right? It kind of expected to kind of happen. Now, in terms of our targets, we like to be more conservative, although it's great to be able to see that we have a trend-based fib going up to 96.5. we like to be a little bit more conservative, and that's where our daily chart comes in, where we actually have a 4.236 extension of 80 cent. This is based on just the high of 3 and the low of 4, skipping that low wave 2. Okay, this makes it a little bit more conservative, and we're allowed to kind of see exactly kind of what lock in those profits before that bear market kind of comes in. And of course, there's a whole host of strategies that you can get into around the bear market. I'm sure we'll communicate some of those out to you guys in due course as well. And if you're a member on YouTube, Patreon, etc., then you'll be familiar with some of the things that we'll be doing in terms of exit strategies and stuff like that. But yeah, so 80 cent is our target here, our top target, and we like to sell and basically lock in profits on that journey to 80 cent, right? We don't just hold out and we sell all of our bags all at one point. No, we lock in profits at key areas, right? We might take a look at that 1.618, the 2.618, the 3.618, and that 4.236. Each of those could be a potential kind of area to liquidate a portion of our bag, right? It's important that we lock profits in and at least pull out your initial investment, so you're not stuck in, with a bag that you didn't want to hold during a bear market, right? But here you can see the cup and the handle and the target that was achieved. All that stuff's pretty standard. And then we obviously start to analyze what's going on over here in terms of the choppiness that is this correction that we're currently in right now. Also worth noting, our stochastic on our daily is just coming out of the overbought area, and the weekly is hovering around that area as well. So again, nothing too dissimilar there. At this point, we're going to jump over to the advice.io dashboard. And the advice.io dashboard, if you're not familiar, there is a link in the description down below. Completely worth signing up. It's completely free, and you're going to learn a little bit more about your cryptocurrencies. Advice, they actually use artificial intelligence and machine learning to help us understand the underlying value of cryptocurrencies, right? And they give us a bit of an insight as to what is kind of going on with that underlying data that we might be able to utilize for our advantage, right? Now, I'm not offering financial advice. Chris doesn't offer financial advice. advice.io are not offering you financial advice, buy or sell signals or anything like that. What they are doing is giving you the information to make more informed decisions. Okay, so here we have Harmony 1. It's a C1 rating overall, which means it's in the lower tier right now. And again, this is something that we should be taking into consideration. Okay, we have a little bit more detail than just the overall rating, though. We can go down into the Fear and Greed Index. Here we assume it's a C3 rating, and you can see that we're pulling down just below that 50 kind of day average. So the market Fear and Greed Index, we're just falling below. So we can see that we are, relatively fearful. I would say extreme fear right now for Harmony 1, right? So it's good to know this. Now, the Sharpe ratio is just below the 50-day average. And again, this is basically your risk-reward ratio. Right now, the risks outweigh the rewards, right? So if you were to just hodl your way through, do expect some downtrends. And I'll get into that in a moment on the hourly chart, right? So it's important that we acknowledge that the Fear and Greed Index has an incredible amount of fear out there right now for Harmony. And of course, we can acknowledge that the Sharpe ratio is also not in our favor. Okay, but we are waiting for a reversal on this. And once we get that reversal, there should still be fear to be purchasing whilst actually the rewards are in your favor. Okay, so we acknowledge. Now, obviously, this is not saying you can just go straight out and sell. You have to couple this data with the charts, and I'll get into that in a moment as well. Now, we obviously do have an ROI here, which is A1. It's performed incredibly well. It's outperformed Bitcoin. It's outperformed Ethereum. It's outperformed Cardano. It's a very, very good performing asset. Okay, we cannot deny that. Those are just basic numbers. We have moving averages here at a C2 rating, so again performing incredibly well. Was performing incredibly well, and it has pulled back. So a C2 rating basically just indicating that there is a downtrend there. Again, we can see that from the charts. And the AMI-HAD ratio is a C2. Now, this is a really interesting one. This is your liquidity, and right now there's a liquidity-based problem when it comes to many altcoins, including Harmony 1. So your question this will be why, and it's probably down to the fact that there's so much fear and risk-reward ratio not working, and basically people are selling. And when you have that, then basically that's going to affect your liquidity. So that could be down to 1 or 2 exchanges. It could be a much wider spread problem. You'll find pockets of liquidity will be fine, but somewhere in the data, this artificial intelligence is indicating that there's problems with liquidity and Harmony 1 right now, which is going to compound the fear in the space as well. Okay, so we have a good understanding that the underlying data isn't the best news in the world, right? So therefore we should be, open to the idea of more volatility, more downside, in the very near future, right? And that's kind of what this data is telling me. Okay, we have problems with the Sharpe ratio, we have problems with fear, and we've got problems with liquidity. The moving averages are not good. The profitability is still there, but there's still things that we should be aware of. So when we come back to the charts and we actually jump into our hourly view and we just expand this up and make it a little bit bigger, you just get rid of that line I drew, and basically we can take can kind of acknowledge what's been going on, right? We've been tracking these kind of waves. It's very, very choppy in that regard to we have huge kind of ABCs inside here. We've got loads of ABCs, but there's nothing impulsive, right? It's basically just correction wave after correction wave after correction wave. We obviously had the triangle. We had that blast out here, which was fantastic. We hit the high, and then we started to see this kind of real big pullback in line with pretty much with what Bitcoin was doing at the time as well. And basically what we're trying to find here is whether or not we're going to get a decent pattern. Ideally, another triangle would be nice. Or some kind of impulsive move that can kind of see this kind of come to an end. Instead, what we end up with is just a bunch of ABCs. We can keep seeing them get completed out, and we don't actually see an end to this just yet. So we are still expecting more downswing, but first of all, before we see more downswing, we have to first of all push up. So we can see quite obviously after Bitcoin pulled back and the market pulled back after everything that's kind of going on in the real world, we can kind of see that there's this A, B, and C to the downside, right? So we know there's more downside swing. We can see that from the advice data. We can see that within our wave count. But we can also acknowledge that inside here, there's an A, there's a B, and we're still rising up. I think we're going to find resistance up at 28 cents before we bring down this bigger C wave, where there'll be a potential another A, B, and C wave. Okay, so we're trying to basically track this down, and this is why we can't just sell our bags and be done with it for a while and then buy back down here. You have to do the wave counts. You have to take all the underlying data in conjunction with our charts, right? We are looking to push up higher than wave A to complete our ABC move, and again, you can see this inside here. There's another wave count. Okay, so here's your A, here's your B, here's your C, and you can go completely insane with these. You can count this over and over and over again, but basically we're getting confirmation that we're pushing up higher. Okay, we've technically gone higher than our wave A here, but we haven't gone higher than our wave A over this side, which would actually be as of 2 o'clock on the 26th. So right now we are looking to push higher than we had been previously. So we're looking to kind of go higher than 27.2. Okay, currently right now we're 27.4. Actually, let me get that right. Are we a high of 27.6? Sorry. So we have to go at least to 27.7 in my opinion to just push that a little bit higher than wave A. Once that comes in, then we are looking to kind of pull back down. And again, this probably will be a big ABC down, and inside here you'll probably also have these kind of movements, right? So what my point here of what I'm trying to say, without kind of confusing everyone, is there's going to be opportunities to buy and sell in lots of different directions. Okay, we don't use leverage, so shorting isn't something that we do, right? We don't use terminology like short the market because that implies leverage. So we're not going to be leveraging the market. We're not going to do that because I would find that high risk. So instead, what we'll do is we'll basically sell when it's high and buy when it's low, and we can use the wave counts to basically make money on that way down. This is something that we employ during a bear market and a bear market strategy. So it's important that we kind of count these waves out, specifically in markets like this, because you can make quite a bit of money even during this particular climate, and then end up with a very good position at the very bottom where you then ride up another big ABC move to the upside. Okay, so you have another big ABC, and again inside here you again would have all of these movements. But what we're really looking for and what we're kind of waiting for as hodlers is not the ABC moves. We're waiting for an impulsive move. We're waiting for that 1, 2, 3, 4, and 5 move. Now if I just move that up, we are waiting for the impulsive move, and it's the impulsive move on the smaller time frame that's going to take us out of this downtrend overall. Okay, and takes us to these fantastic heights that we're looking for. We saw it with this triangle that was formed, and we got this run to the upside here. That's kind of what we're waiting to see happen, right? We can obviously see lots of different patterns here. There could be inverse head and shoulders, various different things that are going on. I am getting more and more confident that this correction is coming to a bit of a close, a bit of an end. It is in sight, but there is a little bit more volatility that we're going to have to endure first. Okay, we are still bullish for anyone who hasn't checked out my recent videos on the bear market kind of theory, the liquidation side of stuff. Everything's looking very, very bullish still, and still very much in a bull run. But we are still experiencing this volatility until the market gets a little bit more confidence back into it. This is something that we saw, quite a bit back in June and July. The market was kind of, doing very similar kind of moves. It wasn't very confident, but once that confidence comes back in, we'll be looking at new all-time highs again. So there's lots of fantastic things on the horizon here for Harmony One, but do expect some more volatility first. Guys, I am going to leave the video there. If you have found it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap that bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With this said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.